Yeah, well, the Fed is going to weigh the pros and cons and likely come out on the side of hiking, but it is a much closer call than any of the prior hikes this year. Here's just a few of the factors the Fed will be weighing. The pro, the economic data is strong. The con, the outlook is weaker. The pro, there's a lot of fiscal stimulus out there and tax cuts as well, but market sentiment has turned deeply negative and could in fact create its own universe of weaker economic outcomes. Fed Chair Jay Powell has already said the way to handle uncertainty, move more slowly. And it's unclear if that applies to December, but it definitely applies to 2019. Markets more or less expect a rate hike, followed by a decline in the Fed's own forecast for future hikes. What might that look like? Here's what it looks like now. Each bar there represents the number of Fed officials who are forecasting a given number of hikes next year. So 3 are forecasting fewer than 2 hikes. That assumes they hike by a quarter point in December. 2 are at 4 at 2 hikes, 4 at 3 hikes, 4 at 4 hikes. So you see a lot of distribution. The average there is 3. That may move back to an average of 2 hikes forecast for each Fed member. The question is whether the Fed will back off enough for a market that seems to be saying no more hikes, and some beginning to whisper, I say, maybe the next move by the Fed will be to cut rates, Sarah.
Yeah, wow, that would be something. So
we had somebody on our air today mention that.
Cut rates. We're actually talking about easing. So the president tweets out again for the Fed not to hike interest rates, mentions the dollar, mentions the global economy the day before a Fed meeting. Do you think that this makes it more likely that the Fed is going to hike rates because they've got to assert their independence?
I think it does, and I think it shouldn't, and I think the Fed will sit around the table and they probably won't talk about that explicitly. But the idea that the Fed has to do this to assert independence, certainly it believes its independence is a key part of its monetary policy. And the reason is because it thinks that the market needs to know that it's doing what it believes is right for the economy, and so it gets the market to move with it. If the market begins to think that it could possibly do things for political reason, that would change the whole dynamic between the market and the Federal Reserve. So it would be better if the president didn't say these things, but the fact that he is in fact saying them, I think makes it more difficult for Jay Powell and the Fed to pause tomorrow.
Steve, just remind us the percentage expectation that's priced in is what, and where was it 2 months ago? Well,
you're in that 70 to 80 percentile range, and it used to be as high as 90, maybe as much as that. And more importantly, that the futures market, Wolf, has almost completely baked out 2019 hikes. I think there's just one in there now.
It's amazing how quickly that changed.